Well, hello there, everyone, and welcome to Momentum Finance channel. Today, we are going to talk about two undervalued consumer discretionary and dividend stocks for you to consider to buy or watch right now in the stock market. The first company to review is a company called Leggett& Platt. It is traded on New York Stock Exchange with ticker symbol LEG. It's a dividend-paying company, as we indicated. It does have a dividend safety score of 70, considered to be safe dividend payer. Leggett& Platt was founded in 1883 and patented the first steel coil bed spring that would shape the way the world sleeps. The company has since become a diversified manufacturer of engineered components such as mattress springs and foams, recliner mechanisms, adjustable beds, steel wire, seat frames, carpet cushion, and armrests. Leggett& Platt generates about half of its revenue from bedding components, with most of the rest from automotive, flooring, and furniture end markets. Consumer spending drives the company's results. Despite operating in cyclical markets, Leggett& Platt has paid higher dividends every year since 1972, and this impressive track record reflects the company's focus on dominating niche that can deliver predictable cash flow. You notice here that the company currently pays a dividend yielding 3.51%, and it is a mid-cap size company with a market capitalization of $6.37 billion. In terms of the last trading price, you'd see here it was last traded at the price of $47.80, and the company's stock has a volatility measure of 0.95. Beta is a measure of a company's volatility, the stock price volatility compared to general stock market, and a beta of under 1 suggests that the company's stock is less volatile than the general stock market. Moving on, if you look at the dividend history for the company, you'd notice here from the graph how over the span of the past 20 years, they have consistently grown their dividend. Back in 2000, they were paying roughly about half a cent in dividend income per share, and right now it's actually sitting at $1.68 per share. The company does pay its dividend on a quarterly basis in the months of January, April, July, and October. As we indicated as well, the company has been paying its dividend uninterrupted for the past 49 years without any reduction. And in fact, in all of those 49 years, they have year after year increased their dividend payment amount. In terms of valuation, the company Leggett& Platt, with ticker symbol LEG, has a current dividend yield of 3.51%, which is about in line with its 5-year average of 3.41%, suggesting that the stock may be reasonably valued today. And their forward price to earnings ratio of 16 is about in line with its 5-year average of 17.5. And the market, as a result, appears to be valuing the stock similarly to how it has had in the past, suggesting that the stock could be fairly priced if you believe in its long-term prospects and health being solid. Looking at the price range for the stock over the span of the past 1 year, the lowest price for the stock was $39.85, and the highest has been $57.95. The stock is relatively halfway between the lower and higher range of the 52-week price. And if, as we talked about, if we compare the forward price to earnings ratio for Leggett& Platt to that of consumer discretionary, you see they have a better price to earnings ratio. All right, let us take a quick look at the number of outstanding shares for the company, their total sales, and the past stock price trends. Starting off with the outstanding shares. Ideally, we would like to see the company reducing its outstanding shares, how many shares is available for the investors in the stock market. And this does appear to be actually the case for the most part. The last 12 months, the number of outstanding shares for LEG is at 136 million shares. In terms of total sales, ideally, we would like to see a steady growth. As we talked about, it is a little bit of cyclical for this business, but the last 12 months is showing to be $4.81 billion in total sales, which is higher than any of the years prior to that in the past 10 years, as you noticed. The highest before was at 2019 with $4.75 billion in total sales. Looking at the stock return For the past 5 years, you're noticing that the stock price has gone down by 7.54%. This could be a little bit of disappointment for investors that are hoping to not only get the dividend income, but also some stock price appreciation. Nonetheless, we wanted to also bring to your attention the past 5 years has been like this. But if you take a look at year to date, you'd notice that year to date, the stock has returned 10.29% in terms of the stock appreciation, stock price appreciation. So that's positive. Also, if you look at, let's say, the past 10 years or so, again, the stock price has gone up. So although the 5 year is showing negative trend, really one of the key factors about Leggett & Platt, LEG, is the fact that it does pay a very solid growing dividend income year after year, and you can count on that. And longer term, perhaps not in 5 years, but longer term, it is also showing the signs of really truly growing its stock price in terms of appreciation. With that, let us take a look at the estimates for the stock price. According to Simply Wall Street and the analysts there, the stock is showing to be 25.5% undervalued. The analysts there have a fair value of $64.15 for the stock. And if you look at the analysts on tip ranks, there's only one analyst covering the stock with a hold rating. And that analyst has a price target of $51 for the stock for 1 year. And if that holds true, that shows an upside of 6.69% upside. With that, let us take a look at the second company, the consumer discretionary company with a solid dividend payment, which is Undervalued. According to our research, it is a company called Whirlpool. It's a household appliance company, and it is very famous. They have a ton of brands. In fact, Whirlpool manufactures and markets home appliance and related products and operates through 4 segments: North America, Europe, Middle East, and Africa, Latin America, and Asia. And the company's principal products include refrigerator, freezers, ice makers, and refrigerator water filters, laundry appliances and related laundry accessories, cooking and other small domestic appliances, and dishwasher appliances and related accessories, as well as mixers. It markets and distributes the products primarily under over 20 brand names, including the Whirlpool, which we all know, but also Maytag, KitchenAid, and JennAir, to name a few. So those are definitely some of the most renowned brands that we've heard when it comes to household appliances, and they all are brands belonging to the Whirlpool company. All right, looking at the company and its stock dividend payment, and they have a dividend safety score of 70, again considered to be safe. They are paying a dividend yielding 2.53% at this time. The stock's last price was $221.20, and the company is considered to be a large cap with $13.9 billion in market capitalization. The stock is less volatile with a beta score of 0.82 compared to the previous company that we talked about, but also the fact that this beta score, which is a measure of volatility, is less than 1, suggests that the company's stock is less volatile than the overall stock market. All right, looking at the dividend history, the graph shows the past 20 years of dividend. You notice here that the dividend growth streak has started the past 10 years. So the past 10 years, the company has been paying its dividend and increasing it year after year, but they have been paying uninterrupted dividend since 30 years ago. They do pay their dividend also quarterly, but they do pay it in the months of March, June, September, and December. And their annual payout currently per share is $5.60. In terms of the valuation, Whirlpool, with ticker symbol WHR, their current dividend yield of 2.53% is about in line with their 5-year average of 2.73%, suggesting that stock may be reasonably valued today. And their forward price to earnings ratio of 9.2 is actually about in line with their own 5-year average of 10. The market appears to be valuing the stock similarly to how it's in the past, suggesting that, again, the WHR could be fairly priced. It is definitely a lot less than the consumer discretionary, the price to earnings. It could be a good sign, but at the same time, we don't want to just look at that. We also want to take a look at their own, the company's own historical forward price to earnings ratio and see how the market has generally assessed and addressed this stock when it comes to that. Looking at the 52-week price range for Whirlpool, the lower The lowest price over the past 1 year has been $168, and the highest has been $252.95. The stock is trading closer to its 52-week high price than that of its lower price range when it comes to the past 1 year. All right. In terms of the total sales for the stock, at the top part of the graph here, you can see the company has a little bit of that cyclicality as well, some drops and some increases, and again, some drops. The last 12 months, they are showing $21.8 billion in sales, which again is the highest that it has had over the span of the past 10 years. When it comes to outstanding shares, we'd like to see this number dropping. And in fact, this appears to be, for the most part, the case. The last 12 months, they have 63.6 million shares outstanding. We wanted to also take a look at the stock price trend over the span of the past 5 years. That is showing to be up 22.2% up over the span of the past 5 years. So not only you're going to get that solid dividend payment, but the stock over the past 5 years has actually returned positive returns for you, and you are going to get that stock appreciation. Lastly, we want to take a look as well at the stock price predictions by analysts. According to analysts on TipRanks, the stock price, projected price, average stock price projected is going to be $251 in the span of 1 year. That gives us a 13.47% upside. This is based on 4 analysts reviewing the stock, with 1 having a buy rating and 3 having a hold rating. The lower price target is at $22, as you see here, and the higher price target is at $280, according to these analysts reviewing the stock. And lastly, if you look at the Simply Wall Street here, you notice that the stock price fair value, according to analysts here, is at $233.34, showing the stock to be 5.2% undervalued. Well, there you have it, folks. A quick review of 2 undervalued dividend stocks in consumer discretionary that have been paying their dividends solidly over the span of the several years, and for the most part increasing their dividend year after year. I hope you found this video beneficial and you gained something of value from it. Let us know in the comment section down below if you are investing in any of these 2 stocks and whether you have them in your portfolio or not. Also, let us know what dividend stocks are you currently watching or adding to your portfolio at this time. We'd love to hear from you. If you found this video beneficial and gained something of value from it, please be sure to give this video a thumbs up and share it with someone who might benefit from the video as well. And of course, don't forget to subscribe to Momentum Finance. Here on Momentum Finance, we post every week several videos about investing, including investing in the stock market and finances and financial freedom. Thank you, and we hope to see you next time.